All right, good morning. It is Tuesday, February the 20th, 2024. We hope you had a nice weekend. U.S. markets were closed yesterday for President's Day. So the Kroll family took the opportunity with the long weekend and we brought the kids up to the mountains, got to do some hiking, which was really fun. But we hope you had a nice weekend as well. Our review season starts Monday already, so next week, Monday, which we are really excited for. We always are. Review season's a fun time of year for us to catch up with you and hear how things have been going and updates from your families, and we're excited to see you. Okay, a couple things in my notebook to start the week here. First off, just in terms of 1099s. Okay, so I know for those of you that work with us, we mail out those, it's like a 1099 summary letter, which particularly for 2023, I think is quite important, right? With the TD Ameritrade Charles Schwab merger, also with Altruist in the mix, many of you are going to have multiple 1099s for the 2023 tax year. Okay, so we just want to make sure you don't overlook any of those, particularly because the dates that the 1099s get generated. So for example, like it's my understanding all IRA 1099 should be done by now, right? That's quite easy for the custodians to generate, right? IRAs are simple. It's how much money came out of the account. That's assuming it's a traditional IRA. That's taxable income, right? It's more difficult for the custodians for taxable accounts, right? So individual accounts, joint accounts, trust accounts, and so the IRS gives custodians. It is now to the end of February, so February 29th to generate. Well, we get that extra day this year. February 29th for 1099s for those accounts. So just make sure you have everything, because I know. Like for example, I think all Schwab's 1099s are done now, but TD Ameritrade I know has not done a number of taxable accounts yet. So just be sure you have everything for 1099s. Next bullet points, just touching on markets last week. Okay, and if you rewind to last week's video, as expected, we thought we'd get some more market volatility. Just we had a lot of economic data come in. Most importantly, just the inflation data. All right, so looking at January's inflation numbers, so that was released on Tuesday last week, comes out a bit higher than expected, right? And so, 3.1%. I think the market was expecting 2.9%, so just a touch higher. But with that, you see the U.S. dollar get a lot stronger after that report. You saw U.S. yields increase. And then you see equities roll over a bit, right? And you have to love the CNBC, the stock market channel, the headline. I looked at. Sometimes I just go on there for fun. I think the headline was Dow down the most in one day since last March, right? So almost a year, right? Biggest down day. When an equally factual headline would have been market pulls back to the same level it was last week, right? But that's again a headline that boring, doesn't sell, right? Just letting investors know the market pulled back to the same level it was last week. But again, they're there to sell advertisements, not provide advice. But interesting, and actually, so the market rallied kind of into the latter part of the week, where it was really, looking on my screen now, the Dow was down 0.1%, S&P was down 0.4, the Nasdaq was now 1.3. International markets were actually up last week, which is interesting. But okay, questions, comments, concerns, please don't hesitate to reach out to us. Again, ensure that you have all your 1099s. Always feel free to have your CPAs, tax preparers reach out to our team if they ever have any questions. We hope you have a great week and looking forward to seeing many of you in the weeks to come. Thanks.